We seem to be moving from bubble to bubble. And besides gold and silver, which possibly could be another bubble, are there other areas that you can look at, maybe derivatives? There's got to be something out there that's brewing.
Yeah, I mean, great question. My biggest concern, the biggest bubble of all, would be fixed income, would be bonds. That would be my concern. And that, it's hard to see it being a bubble, but if you look at where they're keeping interest rates and the money that is still piling in to bonds at these low rates, to me, that's what I would worry about. And why I worry about it is because, bonds are the last safe place to go. That's where people go for security, and you're not getting compensated, I think, for the real risk that you can have. You can lose money in bonds. I mean, you can lose if they default, but you will lose if you buy bonds, long-term bonds, and interest rates start going up. And so, I think that, to me, is the one I'd worry about. Derivatives, I mean, I think we've got a taste of that with, the financial crisis and what can happen. It's really hard to put your finger on exactly what kind of risk you could have there. Yeah, they haven't regulated it. That risk is still there. I hope they are able to control that. I mean, it is a concern. It's a concern whenever you see an asset class move up a lot in price because someone's making a lot of money. Every time John Paulson makes, $5 billion, someone's losing $5 billion, and you just hope that that's not putting the whole financial system at risk.
The fundamentals may still be very strong for the commodity, but they're just way ahead of anything that's rational from a pricing perspective. So it may be that the long-term outcomes for these commodities is probably, and I believe is probably pretty good, but that doesn't make the current price logical. So anytime you're buying an asset, there has to be a point where it makes sense for you to buy the asset and it also makes sense for you to sell the asset. And we've always tried to keep that discipline, not just in securities, we've certainly tried to keep it in real estate. And if we were looking at buying investments now, I would be very hesitant to buy any investment on a long-only position that had already risen, as I said, 5 or 10 times in the last 5 or 10 years. That's just inviting additional risk that's unnecessary.